Clinton's new plan to curb soaring home prices includes billions of bucks in funding, tighter restrictions on foreign buyers, and some say it will not be enough to restore affordability in the Canadian real estate market. Again, some economists and housing experts, according to the Toronto Star, a story I'm reading, and I've seen this elsewhere. I thought I'd reach out to our expert and find out what he thinks. Clinton Wilkins, of course, is our mortgage guru. And Clinton and I have a show here in News 95.7 airing once a month, or twice a month, actually, Saturday and Sundays. Clinton, thanks for doing this today. Appreciate your time, of course.
Thanks for having me, Todd.
All right, so front and center is housing right now, right? And is that a good thing or a bad thing? What are your thoughts on that?
Well, I think it's one of the core issues, not just here in Halifax, but really across the country. As you know, over the last 18 months or so, people's living situation has changed. A lot of us have been working at home. We've been home more than we ever have been before. We're maybe not going on vacation and traveling and eating out and shopping as much as we once were. And it's definitely created some extra demand in the marketplace. Also, specifically in Halifax, we really had one of the safest and best places to be kind of over the last 18 months. And I think that was kind of on the forefront, from across the country. And we've had a lot of immigration here in Halifax, as well as migration from across the country. And, there's really limited housing stock. And I think, we're dealing with a little bit of a hangover from the, last 20 years in Halifax. At one time we had a moratorium on construction, and I think, really we still have a lot of red tape here for builders and developers to, get those shovels in the ground. Part of the issue that we're really seeing is, at the municipal level, and, the province needs to work with HRM, and the feds need to work with the province to really get some of that housing stock moving. The one good thing is we have lots of land here.
Yeah, for sure. What about Justin Trudeau's idea of restrictions on foreign buyers? Let's deal with that first. Do you think that's a good idea? What are your thoughts on that?
I don't think it's going to have a huge impact here in Halifax, to be honest. We certainly do have some foreign buyers in Halifax, and really even on the South Shore, Todd. You think about, foreign buyers maybe buying vacation properties. Will it have a huge impact here in Halifax and Atlantic? I'm not certain. I would say, if we're talking about investments and foreign buyers, I would say it might be more of a hot topic in more urban centers like Toronto, Montreal, and Vancouver. I don't know if that's going to have a huge impact here.
Yeah, do they even have the jurisdiction, the federal government? Is this not provincially regulated to some degree? Do the feds, can they regulate this industry?
I think, the feds can probably regulate anything that they really do want to, whether it's their jurisdiction or not. It kind of comes top down. And at the end of the day, the, land titles is a provincial purview. So, the provinces would need to, deal with whatever the feds decide is going to happen.
What about bidding wars? That's something else that they talk about, and that whole process. You feel that could be tweaked, I guess, or regulated in some way?
I think that's certainly interesting. Now, I'm not a licensed realtor, but I'm certainly familiar kind of with the process from the Nova Scotia Real Estate Commission. And in Nova Scotia, we don't share that information on, what the prices are and what the bids are until, there's been a successful accepted offer and the conditions have been met. Will it be better for buyers? Potentially. But I think that it may negatively impact sellers. And as we know, we're in a seller's market right now in Halifax. And, homes are going for, all-time kind of record prices. Our average home price is up over 30%. So, if we were to disclose basically what the offers were, would the prices be as exacerbated as they are now? I'm not certain, Todd, but I do feel that it would potentially impact the sellers. And the one thing that we need to remember, if someone's buying a home, you're eventually going to be a seller as well. So right now it's basically fair market. And, what we consider a property, value is really what an agreed upon buyer and seller will, meet in the middle. And that's what they really feel the property values are. Do we think maybe people are paying over what the market value is? In some cases, yes. And that's really proven by, an appraisal that would be required on the property. So when we're talking about mortgage finance, and obviously that's my purview, sometimes we need an appraisal. And sometimes the properties, even at the purchase price that's agreed upon between the buyer and the seller, the appraisal comes in less than that purchase price. So what happens in those cases, Todd, is the buyer would either have to pay the difference in cash, or sometimes in some cases the buyers are able to go back to the seller and ask for a price reduction to come more in line with what the market value is.
All right, something else that they're talking about here is forcing Canada Mortgage and Housing Corporation, CMHC, to slash insurance rates by 25%. And this being a Crown corporation, I guess they would have to comply. Is that true?
Yeah, they certainly are a Crown corporation, and they're a Crown corporation that actually brings in a lot of revenue to the federal government. They have done transfers of billions of dollars into the federal government from basically their mortgage insurance and other programs that they run. The challenge will be that I am not certain that the two other private corporations will be maybe as happy with that decision. Not to speak for them, but there's two other private corps, and one is called Sage, and the other one's called Canada Guarantee. And there is an alignment with what the premiums are with all three insurers. So if the CMHC and the Canadian Mortgage and Housing Corporation were to, slash their premiums by 25%, for all their insurance products or for first-time home buyers, it would certainly have an impact on the bottom line. And it will also impact, obviously the bottom line of the private insurers. So that's going to be an interesting one, and that's something that we're certainly keeping an eye on. But I'm not 100% sure that it's going to really increase the affordability that significantly for first-time home buyers.
Well, I guess when the higher the price is for the home, the savings would be relatable to that, would it not?
Yeah. So with the way that the insurance works is, for example, if you're going to buy a home, and let's say you're going to buy a home for $500,000, the minimum down payment is 5%. So 5% on 500 is $25,000. Well, you would then pay mortgage insurance on the remaining amount. So on $475,000, you would pay 4% for the insurance. So in this scenario, you'd pay $19,000 for your high ratio mortgage insurance. If the feds were to reduce that by 25%, obviously, you'd save $4,700, $4,750. It would make a difference to the end consumer, but is that going to make or break a transaction? In some cases, yes, but I don't think it's going to make a huge difference in increasing the affordability. I think in some cases, first-time home buyers kind of buy at their max, so maybe it'll just enable them to buy a property that's slightly more expensive, in terms of, what their mortgage payments are. I think an interesting thing to think about as well is that it's a first-time home buyer's incentive.
Yeah, I was going to ask you about
the shared equity program for first-time home buyers, and there's some regulations in place that you can only in non-big urban areas you can only go up to 4.5 or 4 times your household annual income. So basically, that caps people out around kind of where the average house price is in Halifax. It hasn't really hit with first-time home buyers like the government thought it would. They actually haven't doled out all the money that they'd allocated for the program. I think part of the issue is, it works in Atlantic and it likely works in areas of the prairies, but in more urban areas, the program really hasn't worked as well. So I think that'll be something interesting to see if the Liberals, review if they get back into power. Obviously they're going to be making a lot of tweaks to the housing, and I think that they need to. I think one of the most exciting things that we kind of heard in the announcement was that they're going to help renovate and create, $1.4 million new homes across the country. So I think increasing the housing stock is important, and it's not just maybe units for people to buy. We need rentals. We need, affordable housing. We need single-family homes. We need condominiums. We need a mix of housing. And to bring it back to Halifax, we need more density on the peninsula. Not everyone's a super fan of density, but it is more affordable because we already have the infrastructure in place, like transportation, water, power, things like that. but there's a lot of land available in Halifax where we could build, thousands of building lots. The challenge is the municipality is going to need to get on board. They're going to need to get on board in terms of water and sewer and transportation. And the urban sprawl is very expensive. But I think it's something that, our new provincial government is going to need to work with the municipality to make happen. And likely we are 20 years away from things balancing again. That's kind of where my head's at.
Right.
We're dealing with the hangover of 20 years ago, and it's going to take probably another 20 years to right itself. Our population in Halifax is going to continue growing, so I don't see a light at the end of the tunnel in terms of our current housing state. And I think it may further kind of be exacerbated by, the population growth. And we need it here in Halifax. We need it in Nova Scotia. We always thought that we were going to have a declining population because our population was getting older. But I suspect, in the coming years, our average population is going to continue getting younger, which is pretty exciting. It's great for business. It's great for the economy here. And, the more people we have, the more services that we're going to be able to have as well. So I think there's some exciting times on the horizon.
All right. So I guess the vibe that I'm getting from you is you don't feel that these these proposals that Trudeau's rolled out here are going to have a huge impact in HRM. You feel it's more directed towards or targeted towards some bigger areas like Toronto, Vancouver, Montreal. Is that accurate?
Well, I would say they're probably in the same state that we are or worse. I think the one thing that may be most exciting in Halifax is creating the more units. So depending on kind of how many we get of the 1.4 million and new homes and new units, I think that's probably going to be the most exciting because I think the number one issue that we have here is housing stock.
Clinton, great stuff as always. I appreciate your time, and we'll talk again, obviously, soon. Thank you.
Thanks, Todd. Have a good day.
All right, take care. Clinton Wilkins, he's our mortgage guru. Interesting stuff. A wealth of knowledge, of course. Construction starts on Nova Scotia's first co-housing project. We'll talk about this when we come back.